Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
It seems that you have had great guests, and I'm sure that they have shared a lot of valuable tips during the shows. But just because I suppose most of our listeners haven't had the chance to listen to your episodes, so can you share with me what do you think people should know about or implement as part of their crypto investment strategy based on your interviews with experts?
Absolutely. For my investing purposes, and this is including what I've learned from guests and what I implement myself as well from my own research, the first one obviously is first educate yourself. Are you investing in a crypto because you know the background behind it, or you are just investing in crypto because somebody told you to, right? The intent is very important. Even if you're investing in something as safe as Bitcoin, understand why Bitcoin was made. If you can, just read the white paper or go to a YouTube channel that actually talks about the Bitcoin white paper and helps you understand in a simple term, right, what it kind of means, for example, right? So education is the first thing. The second thing I've learned is always have a strategy for crypto trading. Sometimes people go with their emotions and try to invest in cryptos just listening to some YouTuber out there or podcaster saying go and invest because it's the right time, but it's not the right time for everybody, right? So you should always have a strategy yourself. Are you going in this space with the intention of investing, or are you going in this space with the intention of trading? If you're going into this space with the intention of trading, that's also fine, but always ensure that you know where your risks are, right? You always have a risk management strategy in place. You know which level you're going in and which level you're going out, and always try to follow those levels. That is the most important thing that I feel is important. Managing risk is, everybody talks about rewards, right? Because we know that crypto is something that can give us those 10x, 100x rewards, which none of these other industries or markets may give you. But it's also important that you understand the risks involved in it. What percentage of your portfolio are you actually investing in this particular category? And what are the risk factors behind each of the coins that you're investing in, right? If you're investing in Bitcoin, even Bitcoin for that matter is not risk-free, right? It has risks associated with it. Ethereum has risks associated with it. So understanding those risks is the most important thing. Understanding the flow of money that happens. For example, money flows from Bitcoin to Ethereum to other altcoins to stable coins, and how that money cycle works is very important to understand. So I think this is the few things that I've learned. Obviously, the main things to follow is diversify your portfolio, diversify your crypto portfolio itself. Don't put all of your eggs in the same basket, as people have told it for ages now. Be in it for the long term. I would ideally suggest against going against trading, because I'm personally not a trader. I am a long-term investor and I hodl. So I always see it for the long term. What is crypto or what is Bitcoin going to be in the next 5 years? And if you see that there is a use case behind any of the cryptos that you're investing, be in it for the long term. Even if it's going up and down, don't get phased by it. Always try to be in it for the long term. And obviously for blue chips like Bitcoin, you should always dollar cost average. That is something that I've learned the hard way myself, because I have been trying to time the market myself and it has never worked. I've always seen DCA working much better. So always dollar cost average is the best possible strategy in any of this, including trading. I would say dollar cost average is the best strategy to go forward with.
Amazing. So that's all great, and I'm sure that our listeners will be fascinated with what you just shared. But based on your experience and communication with many experts and ordinary people in the space, what do you think is the main thing that people don't know about the Web3 world?
This is something that I have realized from taxation, actually. if you notice a pattern in many of the countries out there, they have the highest taxation rates for two things. One is gambling, and the second one is crypto. Including in my country, it's no different, right? So people do not understand this space because if something is sufficiently advanced enough, people compare it to magic, right? In the tax expert's case, it would be compared to gambling usually, right? So they don't understand it. They think it's gambling. People are just going to lose their money and the government is just going to get some profits out of it. That is how it is equated to. I think it is important to understand that crypto is not gambling. That is the first thing. And I think that is the best way to learn about it is through your podcast, because that is the message that you want to give it out there, right? For people who are investing in this space. So it is not gambling. There is a strategy behind everything that you're doing. There is a technical reason. There is a fundamental reason for every investment that you're doing. It is important to understand both, just not follow traders who are saying go in this space and go out in that space. That is not going to work out for you. Understand both the use cases, the fundamentals of the coin that you're investing in, understand the technicals of it. And if you feel at a personal level, if your education says, if your research says that this is the right thing to do, I think then you should go for it. That is what I do myself, and that is what I feel others should do as well.
So based on what you are saying, I think that you have answered my question about how a person should do more investing rather than gambling. Is there anything else that you want to add about that?
Yes. So this might not be relevant in every case, but this is something I have learned from a personal experience. So at the peak of the NFT cycle, right? Everybody was talking about NFTs. I forgot my crypto investments. I was like, Bitcoin, it's not going to grow any further. NFTs are the new thing that are coming in. And, I went all in. I used to stay up all night on Discords, chatting up with people, understanding every new project that is coming around, listening to 100 YouTubers talking 100 different things and how this is going to be the next gem. And to be honest, I never truly found the new next gem. I just ended up with a lot of NFTs in my OpenSea wallet, and it was just that. So I would recommend not going in this space with FOMO, fear of missing out. Just because some Discord is saying, oh, this is going to be the next 100 gem, don't believe everything you say. Do your own research, because especially the NFT market, this is something a guest told me actually. The NFT market is like a fool's market. You kind of have to sell your NFT to the next highest bidder, the next biggest fool, right? So it's not 100% true. It is true only if you're trading, but it is true in some cases when people try to flip their NFTs, right? So NFTs have a different use case. NFTs are not just for flipping. They are definitely there with a use case. They are there with a different purpose. We have seen multiple use cases. POAP, proof of attendance protocol, being one of the biggest use cases of NFTs itself. You must have also heard about Gary Vee's NFTs. Those have been treasured NFTs that people have, right? So NFTs are definitely use cases, but understand the use case first and don't go into any space with any kind of FOMO. I think that would be my advice.